And welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Let's have a look at some of the guests we'll be bringing you today on the show. We will discuss the impact of the U.S. action in Venezuela on global oil markets with Cole Smead. And we'll look at the potential impact on the Canadian energy sector with Energy Fund Manager Eric Nuttall. And then we'll look at the record-breaking run for copper with Chris McCaney of Global X. In the meantime, here are some of the stories we are tracking for you in the BNN Bloomberg newsroom. Venezuela's acting president, Delcy Rodriguez, is calling on the United States to cooperate with her government following the capture of Nicolas Maduro. In a statement, Rodriguez invited Washington to work together on a development agenda within international law. U.S. President Donald Trump says Venezuela will need rebuilding and warned Rodriguez of consequences if she fails to cooperate. Maduro and his wife are set to be formally charged with drug trafficking and other crimes later today. U.S. oil stocks are trading higher today after U.S. President Donald Trump pledged to revive Venezuela's energy sector following the capture of Nicolas Maduro. Chevron, ExxonMobil, and ConocoPhillips are surging, although they've backed off a little bit from the earlier pre-trading. They're still up, though, for the day. The idea of expanded access to Venezuela's vast oil reserves. Trump says U.S. companies will invest billions to rebuild the country's crumbling infrastructure. And gold and silver are climbing following the capture of Venezuelan leader Nicolas Maduro. U.S. President Donald Trump saying the U.S. plans to run Venezuela, increasing uncertainty around the country's future governance. So gold is coming off its strongest annual performance in decades, and it's supported by central bank buying and expectations for further U.S. interest rate cuts. You can see it's up 3% today in and around record territory. Silver also back up. Been a wild few weeks for it, though, as well. And turning to the markets, the TSX, everybody's in the green pretty much right now, but the TSX up right now by nearly a percentage point, but not everybody is happy. You've got the energy index. It is off by about 3.8%. And leading the way on that, Athabasca Oil Corp off by 8% right now. And heading down south of the border, you can see everybody up. Look at the Dow Jones right now, up by 1.34%. The S&P 500, 0.72%. NASDAQ, 0.87% as they digest the news out of Venezuela. But it's being seen most, I guess, as positive right now. For a look at the Canadian reaction to this weekend's action by the U.S. and Venezuela, we were joined earlier by our CTV News colleague, Scott Hurst.
With the U.S. operation in Venezuela, that's leading to a lot of questions for Canada's oil and gas industry, as U.S. President Donald Trump is now pushing for American companies to go in and invest and revitalize Venezuela's oil industry. But after years of neglect and crippling sanctions, it is a sector that is in deep despair and could take many years for major investment before production can increase really dramatically. Right now, the Trump administration will, of course, have to deal with the geopolitical ramifications and also questions and concerns about the transition of power and also the legality of the U.S. operation in Venezuela. So experts reflecting on where Canada stands right now ultimately are saying Canada's oil sector can be prepared for what comes next by maintaining its competitiveness. Lindsay.
Let's talk about Prime Minister Mark Carney's response to all of this as well. He responded with a statement over the weekend. Analysts say this response was doing damage control against jeopardizing trade negotiations with the U.S. How measured will Canada need to be with Donald Trump, do you think?
Lindsay, we've seen many countries really with a measured response for several months dealing with the U.S., as many countries, including Canada, have been trying to strike some sort of tariff or trade deal with the Trump administration. But the response over the weekend from the Prime Minister is getting a lot of backlash for his response. Some of what he put on social media is calling for a Venezuelan-led transition process and labeling the Maduro reign as brutally oppressive and a criminal regime, and saying Canada has not recognized the illegitimate regime of Maduro since it stole the 2018 election. However, as I mentioned, the Prime Minister is facing significant backlash as part of that response on social media, calling on all parties to respect international law, yet not mentioning the U.S. directly. And that is ultimately where the Prime Minister is getting a lot of criticism. We heard, speaking to CTV News, former Foreign Affairs Minister under Stephen Harper, Peter MacKay, really calling the response slow and lethargic. And political commentators also speaking to CTV News, suggesting Carney's response is really about damage control against jeopardizing trade talks with our southern neighbor.
Lindsay was speaking with CTV's Scott Hurst. Coming up, the U.S. captured Venezuela's leader, Nicolas Maduro, this weekend. We'll look at what that means for global oil markets when we come back. We are watching the price of oil as the market reacts to U.S. action in Venezuela following the capture of Venezuela's leader, Nicolas Maduro. Now, U.S. President Donald Trump said the U.S. will be taking control of the country's massive oil reserves. And you can see oil right now is up about 1.5%. Here to tell us more about how these developments are affecting the price of oil is Cole Smead, Chief Executive Officer and Portfolio Manager of Smead Capital Management. And thanks very much, Cole, for joining us.
Yeah, thanks for having me. Appreciate it.
You saw the increase in the price there. Any surprise, or is that right in the wheelhouse of what you expected?
Yeah, I think today's a lot about noise. If you're a retail person sitting out an account and you put into, Grok or some AI function, what the knock-on benefits of taking over Venezuela is, you're effectively seeing that answer traded in the open market. Now, do I think that's of value? Not at all. I think the long-term implications are that, yes, it would be naturally foreseeable that Venezuela could increase their production, but there's two major factors needed for that: time and capital. We're all going to die, so time is short, but capital is what's needed. And when you look at the makeup of the energy sector today, investors do not want to put capital in the space. So it's just so fanciful to think that people who don't want to invest in energy are somehow going to put up a bunch of capital, call it $100 billion long-term, to build up this asset base. Is that really the highest return on capital compared to going to other offshore projects that are in Latin America or putting more capital into Canada? That's where the math ain't mathin' to us.
So what then might happen with Venezuela? Could this possibly end up being almost a white elephant for the U.S.?
Well, I think, in terms of geopolitical events, this reminds me a lot of last spring where, big announcements, big news, big headlines, and we called those tariffs. And what came out of that was a lot of investor, frustration and concern and hype. And that was the low. That was the second best buying opportunity in the energy space of the last 25 years. And you wake up today and the oil price is actually pretty similar to where it was in April. And all the stocks are higher across the board. And so I look at that like this in the Canadian energy space. Lots of headlines, lots of, what's going to go on, questions being asked. And I don't think it's really that much information at all. I think it's a lot of static today. But I think you're seeing retail investors particularly, move money around on what they're talking about out on X and places like that. I just don't think there's any good long-term implications. If you are long-term bullish on the oil space, I would say, go look at the Canadian stocks that are just getting, absolutely pummeled today, like Cenovus. Tamarack was down big. Any of the unhedged players, which would be, dominantly refinery, non-refiners. That's where interesting stuff is to be had. And I say that because this is all coming at a time of trough oil prices. And again, what we now know is from April to today that investors want to pay higher multiple for these stocks. And I think the question that's been asked by the market is why? Why are they paying higher multiples? Is that because higher oil prices coming in the future? I think the main thing investors should take away is they're so much more efficient, they're not wasting capital, and ultimately, if there are minority investors that don't want to own these stocks anymore, there's buyback windows open right now. So as an owner of a company, I love the fact that people are giving us lower prices. Please send your shares into our companies. We'll buy them back, and we look forward to doing that more in the future.
But what about is the political pressure on these oil companies from Trump? What kind of a factor is that? Can they resist that and just stay level-headed about how they do things?
Yeah, Canada is strategically important to the U.S. from a security perspective, so I don't think anything of that changes. I mean, if you think about it, would you rather pull a boat from South America up to the United States where there is no refinery capacity to take on, millions of barrels more, or would you rather just go to your existing partner where you have infrastructure in place and refining capacity in place? That's pretty obvious. I think this is not about, Canada and the U.S. I think this is about, the United States having more control over the global oil supply against China. I think that's the real story here. If you think about where Venezuela could go over time, that's 4 million barrels they could go to in the long run only. But I just say that because, that's effectively what Canada sends across the U.S. border every day. And so you put those numbers together, this is kind of like a political reach to get more control of the OPEC game, if you will. Mm-hmm. But really what it does is you draw in Saudi Arabia into alliance, you draw Venezuela in, you have Canada as a strong strategic partner. Congratulations, you have the 3 largest oil reserves in the world, and ultimately those are stronger allies with you than they are with China. I think that's the real math here, and that's why I think a lot of the stock trading and the economics that change off this, it's spurious at best.
And what kind of a change would there be? I just saw that OPEC said they're going to reaffirm their decision from November 2nd to pause production increments. What would it take? What kind of change would it take to make Venezuela a little more appealing?
You have to get drug cartels out of there. There's a million things. Now, here's the one knock-on benefit that no one's talking about. Will the economy of Venezuela do a lot better the next 5 years? Yes. What does that always cause? More demand for oil. And so one of the things that hasn't been said is an increased capacity to produce will also meet an increased capacity to consume internally. And so the question is, what would their internal consumption go to as the economy picks up over the next 5 years? That's going to happen. That's the natural, that's how humans in economies progress, as they demand more oil. But again, I think what it does is puts pressure on Carney and the Canadian government to be as attractive to the United States as they possibly can. So when Carney was talking at the Canadian Club and he said, I don't want to talk about pipelines, we're going to get those done. That hastens that. That's going to get done. And I think that's why you're also not going to see the differentials blow out with WTI, WCS, is ultimately because the market smells pipelines. They smell what the Carney government has pressure on to do, and he has to deliver. Otherwise, they have another out longer term now.
Okay, we'll have to leave it there, Cole. Thank you, as always, for joining us.
Thanks so much.
Cole Smead is Chief Executive Officer and Portfolio Manager at Smead Capital Management. Coming up, following the capture of Venezuela's leader, U.S. President Donald Trump vowed to take control of the country's oil reserves. Now, what does that mean for Canada's oil industry? That's after the break. U.S. President Donald Trump has planned to take control of Venezuela's oil industry after capturing President Nicolas Maduro in a raid. For a deeper look at how that is affecting oil today, we were joined earlier by Rob Barnett, energy and commodity researcher at Bloomberg Intelligence.
We put out a note this morning, making the case that, there's some long-term risks to think about when you're thinking about the Canadian oil patch. But I think most of these things will take, billions of dollars investments and years to materialize. And, you've seen oil pretty flat this morning, despite all of the news. And I think that the possibility of bringing lots of heavy crude back to the market from Venezuela is very real, but don't expect it overnight.
And do you think the oil companies are going to have the stomach for this? Two of them already got burned 20 years ago, 25 years ago. Are they ready to go back in?
Yeah, I think there'll be some interest, but I do think that it's not going to be just a panacea. This is a kind of thing where, sure, there might be some increased interest. It's very hard to ignore the largest oil reserves on the planet that Venezuela has. So I think that it's there probably will be some companies who would be willing to take that risk to enter the market and bring those resources. But I do think that it's not a slam dunk. It's not automatic. It's not overnight. So I think probably all parties are going to proceed pretty cautiously. And, you got to keep in mind the near-term picture for the oil market is that we have excess supply. So probably most companies are sort of in a mindset where they're, keeping their capital budgets pretty tight here at the moment, given that we've got excess capacity, at least here in 2026.
Okay, and you mentioned the impact on Canada. Short term, probably not too much, but they should start planning about something potentially happening there.
Yeah, I think this could reshape a little bit of the North America energy landscape. So, as anyone in the Canadian oil patch knows, the relatively captive to the U.S. market because of the integration with pipelines and refineries there in the U.S. If you theoretically get more Venezuelan barrels on the market at some point in the future, that's a net negative for the Canadian oil producers. It potentially widens the discount for WCS relative to WTI. It probably puts a lot of pressure on Canadian policymakers and the companies in the oil patch to think about additional pipeline capacity that avoids the U.S. at some point.
And with that oil pipelines, would we see them go east as well, along with west?
I think the politics of going east is probably more challenging. Not that the West is easy, but you certainly have a longer path there, and that's a lot of negotiation to find a way to market if you take the eastward path. So let's see how it evolves. My expectation would be that you're more likely to see more thinking about additional options beyond the Trans Mountain pipeline, that sort of thing.
That's Rob Barnett, energy and commodity researcher at Bloomberg Intelligence. Well, as to Venezuelan leader Nicolas Maduro is at a Manhattan courthouse today as U.S. President Donald Trump announced that the United States will take control of Venezuela's massive oil reserves, nearly a fifth of the world's total. What impact could that have on Canada's oil industry? Let's unpack that with Eric Nuttall, partner and senior portfolio manager at 9 Point Partners. Eric, thanks as always for joining us.
You bet. Good to be with you.
I don't know if you heard the interview we just did earlier, and we were talking to Cole Smead, and he was saying he'd buy Canadian oil stocks right now because they're all down. Is that something to look at today with the reaction that we're seeing on the markets?
Yeah, we were this morning. I think the reaction today is based upon a lot of ignorant views. This belief that Venezuela is suddenly, magically, after many years of chronic underinvestment, going to surge production. And not just production, but heavy oil, and therefore displace the demand for Canadian production is really, really dumb. To have stocks down 9-10% right now, I think, is a gift. We're short-term cautious on oil for other reasons. We're much more bullish in the second half of this year and beyond. I would just remind people that it's forecasted that this year is expected to be the peak rate of production from non-OPEC producers. That's 2/3 of global oil supply. Secondly, we think that OPEC only has about 1.4 million barrels per day of actual spare capacity, and yet demand is going to grow, according to the IEA, to at least 2050. And so even if Venezuela is able to resurrect their oil production, even if with profound challenges, U.S. companies are going to run back into country and heavily invest, tens and tens and tens of billions of dollars at a time when, given the current oil price, most companies are barely spending enough to keep their production flat. If all of that comes to pass, the world's still going to need every barrel that Venezuela can produce, in addition to every barrel that Canada can produce. And so we think a day when Canadian energy stocks and oil stocks are down 9-10%, we're definitely adding that, and we are in real time.
And with Venezuela, what would it take to actually get it functioning? And what should Canada obviously should be watching this? What would be the big concern if they do start to try and bring that oil fields back up?
You bet. So they are definitely a competitor with Canada for heavy oil production. We have been one of the loudest proponents of the necessity for Canada to build another oil pipeline of at least 1 million barrels per day of capacity to the West Coast to diversify our customer base. We cannot be under the thumb of the United States. We have long argued for this, and this past weekend's events is yet another example of the necessity for that. I would say there's a tremendous amount of guesswork involved right now in terms of the timeline and cost to add Venezuelan production. In the short term, Energy Aspects is forecasting that to add 500,000 barrels per day, it would take 2 years and $10 billion. Other forecasts we've seen is to get back to kind of pre-Hugo Chavez levels of about, in the high threes to about 4 million barrels per day. It would take at least 10 years and about $100 billion. Just so if you think of their pipeline networks, they haven't been touched in 50 years. So these are assets that have ongoing needs for TLC. They haven't been touched. So the cost estimate for that alone is almost $60 billion. So to see, if I were to have a playbook in terms of the fairy tale Trump plan comes to fruition, what would I be doing? Buying Chevron, buying Schlumberger, buying U.S. refineries because they're going to get cheap feedstock and shorting Canadian heavy oil stocks. That is exactly what we're seeing. So I think that once the dust settles, intelligent questions are going to be asked and answered, and people are going to realize that today's reaction is a massive overreaction.
And with that oil pipeline, will this be the impetus, you think, to actually really push it through? I mean, we hear talk. You think this might be it?
God knows. God knows. Like we've been listening to talk. I still don't think the Carney government, the Liberal government, is a massive proponent of the Canadian oil sector. I just don't think they understand just how hugely important the oil and gas sector is to the Canadian economy. I think they're still stuck in the fairy tales of net zero by 2050 at a time when the rest of the world is pivoting away from all of this nonsense. And we're one of the few countries that is impairing our industry. When, do you think the United States is using that to filter their strategy towards energy? And so we need to get out of our own way. We need to recognize that no public company is going to step up to build another pipeline to the West. It will at first have to be a taxpayer initiative, and yet it's in the national interest of all Canadians to get out of under the thumb of the United States and Donald Trump and increase our export capacity and, very, very importantly, diversify our customer base. It's the very definition of being in the national best interest.
And now you mentioned earlier you were cautious for the start of the year, but the second half of the year, that's what you were looking at. What's the reasons for that?
Yeah, so we think there is an imbalance right now in the global oil market. We do see global inventories growing for the next quarter to two. What we think is that non-OPEC supply will be peaking the next couple of months with final projects coming on stream, with a view of demand growth a little stronger than consensus this year. We think that a lot of the excess will be able to be mopped up by the market. And the market will, at some point in the first half of this year, start to look beyond the near term and recognize that we're in a world where there's lack of sufficient investment, there's lack of sufficient exploration and exploration successes. Non-OPEC production is peaking this year. OPEC has very limited spare capacity, and yet demand is going to grow for decades to come. And so we're heading towards a oil supply crisis where there is a structural imbalance between demand growth and supply growth. U.S. shale growth very clearly has and is coming to an end. And so we're very bullish on the outlook for oil going forward. We think that the oil price will have to rally to incentivize a long lead, high risk, very expensive exploration and oil developments. That is not a oil price in the 50s. It is not an oil price in the 60s. And honestly, it's likely not an oil price in the 70s. That's the future coming. And I think that will start to be expressed in the valuations of oil stocks.
Okay, we have to wrap it up there, but thanks as always, Eric, for joining us. Appreciate it.
My pleasure.
Eric Nuttall is partner and senior portfolio manager at 9 Point Partners. Coming up after the break, we'll take a closer look at copper as the commodity is seeing record highs. That's up next. Venezuela's acting president, Delcy Rodriguez, is calling on the United States to cooperate with her government following the capture of Nicolas Maduro. In a statement, Rodriguez invited Washington to work together on a development agenda within international law. The U.S. President Donald Trump saying Venezuela will need rebuilding and warned Rodriguez of consequences if she fails to cooperate. Maduro and his wife are set to be formally charged for drug trafficking and other crimes today. Greater Vancouver realtors have reported that home sales registered in Metro Vancouver finished the year down 10%, lowest annual sales total in more than 20 years. Sales in the region totaled more than 23,000 in 2025, a 10.4% decrease from 2024. Despite the low sales total, sellers brought the highest total of listings to market on record since the mid-1990s, eclipsing the old record in 2008 by a little more than 1,000. Gold and silver are climbing following the capture of Venezuelan leader Nicolas Maduro. You can see gold's up nearly 3% right now into record territory. Silver bouncing back. It's been on a roller coaster for the last couple of weeks, but it's up more than 8.48%. All of this above the capture of Nicolas Maduro of Venezuela. U.S. President Donald Trump saying the U.S. plans to run Venezuela, increasing uncertainty around the country's future governance. Gold is coming off its strongest annual performance in decades, supported by central bank buy-in expectations for further U.S. interest rate cuts. And for the most part, the TSX is having a very good day, except if you are in the energy index. And there are a lot of losers there right now. Athabasca Oil, Cenovus, two of the hardest hit right now, off 7%. But overall, the TSX is up nearly a percentage point. And the second up day for the year, not bad. There's only been 2 trading days. South of the border, similar situation, lots of green everywhere you look. S&P 500 up by 0.82%. The Dow up by 1.39, 1.4. And the NASDAQ is up by an even 1%. Something else that is up, copper. It's reached $13,000 a ton for the first time. This comes as mines outages and trade dislocations fuel concerns over supplies of the key industrial metal. Let's get more on this from Chris McCaney, Executive Vice President and Head of Investment Management and Strategy at Global X. Chris, thanks very much for joining us.
Happy to be here.
Just quick, is this what's happening in Venezuela? Will that have any kind of an effect on copper?
Largely no. I mean, the impact of Venezuela largely has to do with the oil and gas industry, the more energy-oriented industries out there. So probably very little spillover into the copper markets.
Okay, so it's tariffs that are driving this right now and what the U.S. is doing.
Yeah, really. I mean, with any commodity, you have to look at demand and supply factors. We have, of course, significant demand for copper. We already did with things like energy transition, electric vehicle build out, things like that. Of course, electric vehicles require a lot more copper than traditional vehicles do. And so when we had things like EVs being built out, you had wind and solar coming online, a lot of demand for copper in order to build out that network. And now we have new demand, really, or newer demand from data centers and the build out around AI. And of course, that AI infrastructure is causing a lot more demand for copper here right now.
And I was looking, the U.S., I think, holds roughly half of global inventories, but they only use 10% of the world market copper. Are they cornered, or are they just holding on to it for needs coming up, expected needs coming up?
Yeah, I think a lot of this comes back to the tariffs, as you had mentioned. You know, earlier in 2025, there were tariffs sort of threatened on the copper market. That caused a lot of U.S. companies to hoard as much supply as they could. Now, those tariffs ultimately didn't come through, but there is uncertainty as to around if new tariffs will be implemented. And so, as you mentioned, U.S. companies really holding on to a lot of the global supply out there right now.
So, and as that drops, that supply, can we see copper prices dropping too?
Potentially in the short term. You know, we do think long term there is still a structural deficit of copper supply. And so as demand continues to increase over time, of course, it takes a long time for new supply to come online. We think that provides a floor to copper pricing going forward. You know, just looking at S&P Global, they're predicting copper demand is going to increase, call it 66%, maybe about 2/3 in the next 10 to 20 years, and potentially even more as you move that time horizon out. And so, you know, really from the demand picture, nothing really slowing down from that side of things. And so it will be incumbent on finding new supply and bringing new supply online in order to ease those prices.
And that takes a while. There's also concerns going on with the strike. How much of a factor is that right now down at the Capstone mine in Chile?
Yeah, really, you talk about a strike. There's also been some closures of some mines as well due to safety concerns and incidents at some mines. And so all of this is having a big impact on the supply. Again, demand continuing to increase, supply actually constrained, not just from new supply not being able to come online, but as you say, some of these mines being closed for various reasons, meaning existing supply that we thought was there is not coming out of the ground for any time soon.
Do we see more? I mean, part of the reason, from what I understand from the strike down at Capstone, it's on. They say, hey, look, copper's at record highs. We want a piece of the pie. Is there murmurs and rumors of other mines seeing similar situations?
Hard to say, really. In terms of where copper is globally, it's very dispersed. Of course, concentration in Chile and Peru in South America, but also China, Russia, Australia, others have a lot of supply as well. So really it is dependent on each of those markets. Of course, labor issues are different from region to region as well. So, we don't think that's going to be a huge concern going forward. But again, anything that constrains supply is going to have some sort of upward momentum on prices.
And what other things are you keeping an eye on when it comes to copper?
Well, the U.S., of course, at the end of last year, adding it to their critical minerals list. So this isn't necessarily even just supply and demand now, it's geopolitics. And so a lot of countries, and of course the U.S. very symbolically, by adding copper to its critical minerals list, is indicating the importance to national security of containing and having a copper supply and supply chains that go into the country. And so you'll probably see other countries look to do this as well. And it's going to create a global arms race to keep that copper supply within domestic borders.
I guess the big one for that is China. It feels like it's been quite quiet, actually.
Yeah, that's right. We haven't heard much out of there. It's really been about, some of these disruptions that we've been talking about. Of course, we know China is forging ahead with AI as well. In terms of that build out, there's really an arms race there also. And so again, going back to that data center requirement and that compute requirement requires a lot of copper for that. And so you can be sure China will be needing a lot of that as well.
Okay, Chris, we'll wrap it up there. Thanks as always for joining us.
Absolutely.
Chris McCaney is Executive Vice President and Head of Investment Management and Strategy at Global X. Coming up, the arrest of Nicolas Maduro has thrown Venezuela's politically sensitive oil sector back into focus. We'll have more on that after the break. We are watching the price of oil as the market reacts to U.S. action in Venezuela. To tell us more about how these developments are impacting the price and what this means for the Canadian oil sector, we spoke to Randy Ollenberger, Managing Director, Oil and Gas Equity Research at BMO Capital Markets.
The impact here, I think, is probably in line with expectations. We thought it could be modestly lower on the back of this, just given kind of the negative sentiment, and that nothing's really changed. I mean, the blockade is still in place. It's uncertain whether the Venezuelans are going to comply with U.S. demands. And so really nothing's changed today versus, say, 2 weeks ago. So we thought, maybe oil prices might be a little bit softer this morning with the prospect of a return of Venezuelan exports. But it's traded up a little bit. I think that just reflects the fact that, the blockade still is in place. And so that does mean a little bit less oil coming out of Venezuela. But the bottom line is the market is still oversupplied by 2 to 3 million barrels a day. And so I think negative sentiment at the end of the day on the oil price is going to win out.
We know that Canadian heavy crude oil is very similar to Venezuelan heavy crude oil. Is there a concern here that maybe the U.S. could be replacing what it imports when it comes to Canadian heavy crude for refining by Venezuelan heavy crude? Like, is there a concern there?
Absolutely. I mean, I think there is a risk here that if we do see U.S. companies return to Venezuela, start investing significant capital, that we see growth in Venezuelan heavy oil production. And the natural home for that oil is the U.S. Gulf Coast. We send around 400,000 to 500,000 barrels a day of Canadian heavy oil down to that market, and we would likely get displaced from that market. So we would have to move that oil elsewhere. We have some pipeline capacity to the West Coast, that's available, but not enough to fully move that oil. So that would create some challenges for Canadian heavy oil producers, and we're seeing that reflected in the performance of those stocks today.
Is there an immediate concern, though, or do you think, like some experts are saying, that this would take a very long time when it comes to legalities that are required, also, production, just infrastructure in the area when it comes to Venezuela? Like, is this something we're going to see happen within the next 24 months, or do you think this is years down the road?
Yeah, I mean, I think it's going to take at least 24 months and more likely 36 months. It's going to take some time here. It's going to take some reinvestment. But, I mean, keep in mind, we could see Venezuelan production up to 1.1, 1.2 million barrels a day in pretty short order if the blockade is lifted and Venezuela is complying with U.S. demands. That could mean we could see up to 300,000 to 400,000 barrels a day of Venezuelan heavy oil coming into the U.S. market. We saw on average in 2025 about 140,000 barrels a day of Venezuelan oil coming into the market. So at the margin, you could see incremental heavy oil coming out of Venezuela in the very near term. And in the medium term, say the 24 to 36 month period of time, you could see substantially more Venezuelan heavy oil coming into the market. And that's really where the risk is.
What would it take? I mean, can you go through, maybe if you could, go through the process in terms of what it would take for the U.S. to start accessing more Venezuelan oil?
Well, I mean, the first thing, obviously, is there's a lot of U.S. sanctions in place. So Chevron's been receiving waivers, which is what's allowed them to bring their production into the United States. That's the 140,000 barrels a day that's coming in now. If those sanctions were lifted and Venezuelan oil production was, say, in the range of 1.2 million barrels a day, theoretically, you could see, up to 400,000 to 600,000 barrels a day of Venezuelan oil coming into the market versus that 140. So really just lifting the sanctions and allowing Venezuela to return to previous levels of production, which was in the range of 1.1, 1.2, that could be something you could see in very short order. Longer term, I mean, we're really talking about significant investment in the tens of billions of dollars to start restoring production to where it was prior to all of the sanctions getting put in place, which is around 2.2, 2.5 million barrels a day. And longer term, I mean, if you really wanted to think about where oil could go, I mean, prior to Chavez coming in 1998, Venezuelan oil production was in the range of 3.5 million barrels a day, with plans to go to 5 to 6 million barrels a day.
If Canada, I take your point that what you said earlier in terms of Canada needing to increase production and build more pipelines to stay competitive when it comes to Venezuelan oil, but if there's a supply glut kind of on the horizon, particularly for 2026, an oversupply of oil, is there much point in Canada continuing to build more pipelines when there's just an oversupply globally of oil?
Well, I mean, absolutely, because we do need to move some of the oil that we're already producing. So, I mean, the alternative is to shut in that oil, which really doesn't make any sense economically. Canada is a low-cost producer. It's really just, we don't have the ability to fully move all our oil to different world markets if we're getting pushed out of the U.S. Gulf Coast. So, I mean, it doesn't make sense to shut in Canadian oil. Canadian oil is a very low-cost source of supply. It's actually lower cost than, say, the Permian, for example. So it really wouldn't make any sense economically to see that oil shut in. And so I think there's an economic incentive for the country to capture the tax revenue, to capture the royalties, to make sure that we're still seeing people employed in the industry. So there certainly would be an economic incentive to do that.
Okay, for investors that are maybe watching this and wondering whether they should invest in some oil companies today or looking at some of the prices that are out there and wondering what's going to happen in terms of this fluctuation, is it too early to tell, or do you think it's still maybe an okay idea to invest in Canadian oil companies, or where do you think investors should be looking at this time?
Yeah, I mean, I think, if you said you looked at the oil price today and, it's $57, and let's assume it stays in that range of $55, $57, I mean, Canadian oil and gas companies can still make very good money at those levels. They can still grow their dividends, they can still grow their production, and they can still buy back shares at that level. So, I mean, I think the investment case for Canadian oil companies is still intact at these price levels, keeping in mind that whatever happens in Venezuela is going to take some time to unfold. 2 to 3 years out, I mean, who knows where the oil market will be, but certainly if we see higher levels of Venezuelan oil production, I mean, that could have some negative implications. But we're seeing the stock sell off pretty aggressively today. I would argue that sell-off is overdone, considering it's going to take some time to see more Venezuelan oil in the market.
Right. Okay. So that's my final question for you then, right? Because what we're seeing today, obviously, things are very fluid. Things are moving quickly. And there's a lot that has to be considered over the next couple of days and weeks. How long do you think it will take before we see kind of a more steady price of oil after maybe the dust settles after what happened?
Yeah, I mean, I think we're going to have to just watch what Venezuela says. So we have a new president. She was sworn in this morning. So what is she going to do? Is she going to comply with U.S. demands? Are we going to see any of these sanctions lifted? That's really what we're watching, to see whether the Venezuelan government complies with what the U.S. wants and whether or not that is enough for the U.S. to lift those sanctions. If that happens, then we definitely will see more Venezuelan oil coming into the United States. Not enough that it causes a problem initially. It's really more that medium-term growth potential that creates a problem.
Lindsay was speaking with Randy Ohlenberger, Managing Director, Oil and Gas Equity Research at BMO Capital Markets. Coming up, we'll continue our coverage of oil after U.S. President Donald Trump said the U.S. will take control of the South American nation of Venezuela following the arrest of its president. After a series of explosions in Venezuela, U.S. President Donald Trump announced the capture of Nicolas Maduro, the president, and his wife, who will face trial in New York on narco-terrorism charges. For his analysis, we were joined earlier by Jeff Hall, Senior Financial Advisor at Manulife Wealth.
This was quite a situation with Operation Absolute Resolve. And on a military side, what a success. Over 150 aircraft involved, including Chinook helicopters. I've been on those. They fit about 50 troops per helicopter. This was a massive operation. They only have 2 injuries, no death, and no equipment lost. That's batting 1,000. Very rare.
I mean, that must show some incredible intelligence.
Yeah, my understanding is the CIA started working on this back in August, and they actually started training troops in September. So one thing the U.S. military is very good at is they will drill, drill, drill. It's like boxing matches. I always say they're never won and lost in the ring. They're won and lost in the gym leading up to the ring. And the military spends a lot of time training. And as usual, especially with the Navy SEALs involved, they always do these operations at night because there's an old saying, Navy SEALs own the night. When your competition can't see, it's like playing hockey and one team's blindfolded. It's not even a
Was it not
fight.
Delta that was involved in this?
Delta was the main tip of the spear for this. Actually, it was across the whole sphere of everything.
Oh, really? Okay.
Even including Space Force. Remember when Trump first started, everyone kind of mocked it. Space is now high ground. Even in the medieval times, high ground was key. So they're called Guardians, the guys that run and the ladies that run Space Force. They were heavily involved with satellite imagery, movement on everything. It was truly a massive operation. And again, to have 2 injuries, that's stellar.
Okay, now big picture now it's kind of, we're into almost a little bit of a calm, I guess you could say. I think everybody's figuring out what's happening next, what's unfolding next. What are countries like China and Russia? They're looking at this, and what do you think they're thinking right now, or what are they planning?
I think, first of all, they're pretty upset because China got about 60 to 80% of the oil coming out of Venezuela because it's a different kind of oil than most have available. It's actually kind of a heavy sour crude. So China was a big one. Russia was a partner. Actually, the U.S. military took down all the Russian-designed Venezuelan air defenses just to get the troops in, as an example. So Russia's not happy. China's not happy. Iran is not happy, but so is Cuba. Cuba gets almost 100% of their oil for fuel, for generators, et cetera, comes out of Venezuela. That tap's turned off right now, and Cuba's already strained at every angle. So it's going to be a very interesting thing to see this kind of cohort on the other side of the globe. But Trump's definitely done a major flex here and securing kind of that Western Hemisphere dominance by kicking out a lot of these foreign actors basically out of a country and taking that chess piece off the table.
Somebody was calling it the Don Roe Doctrine, right?
Yeah.
And he adapted the Monroe Doctrine and advanced it, I guess you could say. But Venezuela, though, the reality, I think, was 1%, less than 1% of daily production. Yeah. But it's what they possess as well.
Yeah, it's actually #1 in the world for known oil reserves, ahead of Canada, Russia, the United States, Saudi Arabia. It is #1. But right now, it's way down list number 21 as far as actual producers of oil. And it just showcases the decay of the infrastructure that's been there for decades and how it hasn't been kept up. Because remember, they chased out all the American companies and didn't know how to run a lot of stuff. Actually, the only American company still involved in Venezuela is actually Chevron. Yeah. People don't realize there's still an American company there, but all the other ones have either fled because people are being kidnapped and other things.
In court with the Venezuelans, right? Over
exactly. Yeah.
Now, I saw a number, $100 billion to get those back up to snuff, to even just to function. Are there companies that are going to be willing to take a chance on that? Oil companies especially. It's a weird one because as you help Venezuela start pumping more oil, it may bring down and put more supply in the world. It's just going to bring down the price of oil. So you're almost like maybe hurting footprints in other parts of the world with your oil. So it's going to be a fine balance they have to do when they're trying to help and refurbish, refine, and help rebuild infrastructure. But are you shooting yourself in your own foot
in the oil industry. So it's going to be interesting.
I imagine there's a lot of oil execs figuring out their next move with this because they've got to balance Trump and balance money.
Yeah, it's volatile. And even with regime change, the whole game plan is thrown out the window. All the rule book is thrown out. There's an old saying that regime change is never easy. It's, history is a warning label that most people never read.
That was Jeff Hall, Senior Financial Advisor at Manulife Wealth. Market Call is coming up next. And today on the show, we have Rick Rule, President and CEO of Rule Investment Media, LLC. His focus, natural resource stocks, should be interesting. All right, let's take a look and see how the markets are shaping up right now. Bay Street first. It is doing quite nicely, thank you. Moving well for today. You can see it's up second day in a row. Look at that. It's up almost 1.2% right now is where we're at. And seeing who the best performers are for the day, just a quick peek here. Not surprising, silver leading the way with the way silver is performing on the markets right now. It's up about 7 or 8%. Endeavor Silver is up. Bitfarms, another one, Silver Core. It's up as well at this point. And so things are doing well. Of course, going the other way, the energy sector, oil companies taking a hit right now, but they will likely bounce back. Head over to Wall Street now. There's some of the oil companies. Yeah, let's pull this up for a second. You can see off by 6.7, 7.5, 7.7, 7.3. They're all down for the day. We'll see how the reaction is. And Wall Street also seeing a good second day of 2026 for trading. S&P 500 up by 0.84. Dow up by 1.5, and the NASDAQ is up by 0.9. And that is it for us on Morning Markets. Thanks for watching. We'll see you back here tomorrow.